Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the 20th of December. We are hanging out on is it Thursday? It's Thursday. This whole week has been crazy, right? So I know it's the 20th and I know it's almost Christmas. So I hope everybody is doing well and hope everybody's had a great day trading. As we get ready to take a look at the market, just trying to find my chat really quickly. And as is the case, oftentimes for me, technology usually gets the first blow in. So still looking for our chat here. Looks like we're about to be up and running. And hopefully I'm seeing today's version of myself instead of yesterday's version of myself. Like I saw, it kind of weirded me out. But hope everyone had a great day trading. Now, we do have a few earnings companies coming out tonight, most notably Nike, who it looks like they beat revenue. I didn't have time to really dig into it or anything, but they did take out revenue from the headlines, and we definitely are seeing some upward movement on them in the after hours market, up almost 8% right now. So the initial reaction, at least to those earnings, pretty solid. We'll see if that can carry, all the way into tomorrow's pre-market and then into the open. But as of right now, it looks like they are doing all right. You also have CTAS coming out tonight, as well as CarMax tomorrow before the market opens. And that's going to about do us for the year. I believe McCormick is the only S&P 500 company, I should say, that is reporting earnings next week when I did a quick glance ahead to next week. So who wants to report during Christmas week? Maybe McCormick. Maybe it's a good idea. No one will be paying attention. I don't know. But we're about done with earnings for the calendar year. Should be interesting to see how Nike deals with the market volatility going into tomorrow after what appears to be, at least at first glance, a good solid earnings report. Shifting gears into our indexes. It kind of drifted up in the futures market, overnight. And of course, we all know how that one ended. S&P, all of our indexes really struggling, closing down well over 1%, almost 2% in the Dow Jones. Over in the S&P, we did come off of the lows. So we didn't, close at the low of the day. But we continue to, of course, be very, very bearish in everything that we are looking at least most equities. Everything got, not gold, right? Maybe not utility sector, but certainly in equities, most things are looking still rocky here today. Of course, we took out that major support level yesterday, breaking down, below and closing below what I would definitely consider a lesser level of support. But certainly we have been here before. It was a breakout point in days gone by, and happier days for the bulls back in August. We are below that. Really, next level of support is a little bit of ways away within the S&P before we start working into some longer term trend lines and things like that. So all signs are still pretty ugly. Over in NASDAQ, not to be outdone by the S&P closing, I think we can say that it did break support as well here today. If we go in and look at a weekly chart, you can maybe have that argument with that tail, right? That tail, that shadow, does it count? Does it not? For me, I think that I'm going to call it that it does count here. So we have taken out that support level, got a little more room. We talked about it yesterday. We've been talking about it for a while off and on. There's more room to the downside, with the way things are set up from a technical point of view, as we continue to break through more and more levels of support. The Dow really got hit hard today. Did come off of its lows, was down well over 2% not too long ago, clearly taking out that support level. Of course, the Dow and NASDAQ yesterday kind of held, while, of course, the Russell's taken that out a while back. The S&P broke yesterday. Here we are today on the Dow, not wanting to be left out of the bearish party, breaking down, closing clearly below support. Again, kind of keep an eye on all of these old support zones. I know that you will. I know I don't need to tell you that, but I will anyway. All these old support levels, keep an eye on them. If we rally into them, they should present a challenge. They should try to act as levels of resistance for us. Over in the Russell, it just continues to be uglier and uglier. And good afternoon, Ed, and good afternoon, everybody. I hope everybody is doing well and enjoying the bearish side of the market, right? Crazy. If we were talking a year ago, we hardly ever would have talked about being bearish. But the market does what it wants to do, and our job is to go with it, right? So over in the Russell, clearly taking out that 1350 yesterday, pushing below it here today. Really, the next level of support is around that 1300 mark. That's also going to line up with a pretty long-term trend line, a fairly steep trend line. But if you kind of look back, here's our 13, here's our trend line. This is, again, another significant, in my opinion at least, while 1350 mattered, 14 was important. I think 14 was very important. I think 13 is very important as well. We got a little ways to go, but it was a breakout point. It's going to kind of line up with a fairly long-term trend line, and we're going back a while now to draw this trend line here within the Russell. So don't expect it to probably turn around right out of the blue. We do have a little more room to go after clearly breaking 1350 today. Probably, not a lot of temptation as a potential buyer. Again, not that I would be one, but I always try to think like one. Hey, maybe I would buy at 13 if that was my trading style, right? But I'm not going to buy here because I have to put my stop loss below 13. So we've got a little ways to go. So as you can see, we've broken support everywhere now. Maybe you could argue we didn't take out the tail on the NASDAQ, and you don't want to call that, and fair enough if you want to be, look at it that way. I wouldn't really put up too much of a fight. But certainly within the Russell, the S&P, and the Dow, really no room for debate from a breaking point of view. Very bearish. Volatility is still very high. We've saw the VIX shoot up even more here today, as is often the case. Volatility increases as fear increases, then all of a sudden we start to break support levels, and everybody, and I don't necessarily mean us, I kind of thinking about your average day-to-day, kind of hands-off investor, if you will. They see the news, S&P hits a new yearly low or breaks a support level, so fear definitely is going to continue to work back into it, and that's not going to go away until it does. My expectations are this volatility will ultimately die down as we kind of work into a more established downward trend. But right now, people are still on the ropes. They're not. They're still shell shocked. I don't necessarily know why. We've seen the broad markets, the different sectors, break and try to establish support levels and then fail those support levels. This isn't a new thing that happened today or happened yesterday, right? But it seems like in a large part, the world kind of caught on that it's happening in the last couple of days, at least to me. So volatility certainly remains high as we continue to increase over in the volatility index. Over in our sectors, pretty rough across the board, with the exceptions of maybe utilities. I think it's starting to shape up interestingly. We'll take a look at it here in a minute. But over in materials, again, yesterday, maybe we weren't comfortable calling it a break. I think today we can safely call breaking down a pretty safe call right now, for me at least, over in the materials sector, clearly taking out that low. We kind of had those choppy tops, right? But we've taken them out as well as we continue to see a lot of selling over there. Energy is just hideous. It's been hideous for a while, right? It's been really ugly since we broke, in my opinion, at least, since we broke this. We definitely put up a fight, back here about a month or so ago. But once that broke, that was pretty ugly. And then once we take out that low point, that's pretty ugly. Again, kind of looking and thinking ahead as far as, setting targets, managing trades and expectations. I don't know the future, but the thing that jumps out to me in the energy sector is we don't have support for a while. Right now, things can and maybe will develop as we work our way down a little further, rally up, things like that. But as it currently stands, I don't know how you can't look at this and say, well, there really isn't any support of any node until you work into 50. That continues to be a very bearish area within a sea of bearish areas. So it's not like it's easy to be bearish right now. But that one's particularly ugly with how much space there is between where we currently are and where, at least I believe, the next major level of support is. Over in the financials, continue to drift down. By today's standards, pretty mellow day. we pushed up, early. We kind of gave it back over the course of the day, closing, down a little bit, under 1%. Still working our way to a support level, so we still have space to operate before we, hit that potential rally point. And again, I use the term loosely. I don't know that I'd be buying off of any of these support levels, but I'm going to respect them. I'm going to be thinking about them as potential places to exit out of trades, potential places to get into trades, right? Anytime a stock breaks support, that's an opportunity to sell. Whether or not we want to take it, that's debatable. But anytime something breaks support, that's an opportunity to sell. Anytime it breaks resistance, that's an opportunity to buy. So I always kind of want to think ahead, probably have some bearish trades in a variety of areas, probably most of us. And so, having a little bit of a game plan of where it might retrace. I'm a wimp. You guys know me now. I'm wimpy. So I'm always being paranoid. Maybe I was going to say cautious, but paranoid might be a better word. I don't know. So over in industrials, really, really rough shape. Again, the Dow is way down today. We, of course, broke yesterday in the industrials. And this chart, again, kind of like that energy, is pretty ugly. We are hanging out at the 200-week moving average. And that is something that personally I do keep an eye on. I've seen it play in multiple occasions. We've actually seen it play specifically on this ETF back in I guess it would have been 16. I'm not saying that I'm going to buy off of this 200 or I'm going to stop being bearish necessarily, but I am going to kind of look at this as being an area that should try to put up a fight. If we lose that fight, and while I don't ever want to bet against, support resistance, my expectations are we are going to lose that fight. Really, there is quite a bit more room to the downside, in my mind, at least within the industrial sector. We have to go again. We're looking at some pretty long-term trend lines here, as well as a fairly major breakout point, which is still way down there in that 58-59 range. So, this 200 week, for whatever it's worth, we've seen it act as support before. And again, I'm not saying I would buy blindly off of it. I certainly wouldn't. But if that can't establish some support, really can't see any reason why we don't see quite a bit more selling over there in the weeks to come. Ideally, we'd get a nice rally back up, and then, even if it didn't all the way work back into that old support level and then kind of get an entry. But we may not be getting those things as long as the sellers are so quick to jump in right now. We're just not seeing retracement opportunities. I'm sure most of us would like some retracement opportunities, but folks aren't willing to rally this thing, right? I don't blame them. So I'm not either. Over in technology, again, we took out that support. Now we do have that shadow again that we can debate, but we close very, very close to that. Another very bearish chart over in the technology sector. What could have been, right? When this was maybe starting to develop. But you break support, you can't go up if you're breaking support, right? Staples have been getting absolutely annihilated. They were kind of late to the party, not really breaking down till late last week after showing some flowing momentum throughout the week and some questionable behavior at support. Back in through here, we watched it, and I know we didn't trust it, right? So looking pretty ugly over there. Not really a lot of support either. If we're thinking about, is this the bottom? I know this is, one of those more defensive areas that maybe buyers are going to move into, and that's fine. That might develop. But as we currently sit right now, there's a lot more room to the downside before we test major levels of support or interesting price points from that perspective. Again, if you look at this pattern, you'll see over and over and over again where this space fills, right? It might take a little bit of time. It might not happen at all. Obviously, I don't know the future. But if I'm interested in the staple sector right now, I'm waiting till they get down here to buy them at support. Again, that's not really my style. Or I'm waiting for them to create a higher high and a higher low. And that's going to take a little bit of time. But however you're viewing it, I have a hard time seeing how anybody's looking at other than, this is not looking good. So I don't know how you could be bullish on just about anything. This sector right now really, to me, kind of jumps out. And this is just isn't as extended to the downside. Yeah, in the last week it is. I mean, we've really tumbled, since we took out that support level But we have, before that, we were outperforming the market within this sector. That might, and as we iron out, as we kind of simmer down, maybe we'll start to see that that money come in to this, type of a defensive sector. Right now, I think you don't want to get too glued to that philosophy because I don't think the charts as a whole are backing it up in that sector. Over in utility, I'm liking the way it's developing. We continue to show a lot of volatility the last couple of days as we're kind of hanging around this trend line, that 50-day moving average, that old breakout area, right? That 55 zone. We're seeing a lot of back and forth. Haven't really got any clear signals just yet, in my opinion. Again, it's one of those, and I'm okay with it. We don't need to trade tomorrow. We might want one, but we don't need one, right? Still haven't seen that turnaround candle, but we are seeing, the battle in an area, at least in my opinion, makes sense. This should be a tempting price. And maybe I'm not going to take it because I don't want to touch anything bullish or whatever my reasons are. That's fair enough, but I can understand where the price is coming from. I'll continue to monitor this going in to the next little while, thinking about how we're going to trade it. I mean, right now volatility is fairly high, so from a directional point of view, we know what that can mean. That means, if you're, not giving a lot of room on your stop loss, there's a good chance you're going to get whipsawed out. And if that's not, and it doesn't pertain specifically to the utility sector, anything that we ultimately are looked to trade, while volatility is high, we want to think about, are we comfortable with it? Giving it more room on our stop losses, giving it less room on our stop losses, doing theta, out of the money credit type of plays, working with, debit spreads that in my mind, they can kind of help offset that volatility. If we do a bull call spread, for example, this very second on XLU, that back and forth volatility, I'm going to notice it, but because I have it as a debit spread versus just a long stock or a long call, it's being offset a little bit because I also have that short call, right? And that's one of the things that I at least like about debit spreads. They are things I like when things get more volatile personally, because they make that volatility a little easier to stomach. And again, you don't have to agree with that, but that's how I've always kind of thought about them. Whatever your thoughts on that are, I don't think we've had any signals just yet. The price is starting to look tempting. We're seeing the activity there, but we're not really seeing any confirmation, at least just yet, in what I would argue our only bullish sector right now, the only one that I could understand if you bought it today, even though I wouldn't have, I would have understood that. Everything else, ooh, yuck. Speaking of yuck, my old friends in healthcare, I love them for different reasons now. But I sure loved them for a long time as a bull. We, of course, took out support. We filled that space. We have filled that space. This is a price point that we're going to watch. It was a breakout point. We've seen a lot of activity in this area before. I will expect it to try to act as a support level, whether, again, not thinking this is a bottom. I'm not seeing any bottoming signals, but I will expect support to put up a fight. If that breaks, again, just kind of like the same, almost rinse and repeat. If this level of support breaks, I can't think of any logical reason why we're not down here in the not too distant future. I will expect it to try to fight because I think those are good expectations to have. And I think you always want to respect support and resistance, regardless of whether or not you think they're going to break or hold. Act as if they're going to hold, until they don't. Is always the best way in my mind to do it. But we continue to be very bearish over in this sector. Again, it was holding up a little bit better, much like the staples sector. It wasn't as strong as maybe the staples, but it was holding up better than most other areas in the market. But it is making up for lost time. No doubt. Over in discretionary, clearly took out that support level that we've been kind of keeping an eye on, closing below that here today. Again, not really a lot to prop it up for a while. So it's kind of a recurring theme in so many of these sectors, and you're seeing it across the board in stocks too, not just the sector ETFs. They've broke those big support levels, and now there's room to go before they're testing anything major in the immediate, and so that's why, anybody who's bullish, you're braver, you're crazier, you're smarter. I don't know what it is, but I don't understand how you're bullish if you are. So I'll just leave it at that, but still a lot of room to the downside there. Again, one of those type of patterns where we can kind of watch that old breakdown point, watch, and we'll be watching this together, of course, but keep an eye on your shorter term averages. They work their way down. Those things oftentimes kind of act as resistance catalysts within these downward trends. Over in real estate, another drift to the downside here today. I still really don't like this sector one way or another, as I've kind of alluded to. I mean, once we took this out and the way that we took this out, it's very undecided, and I think this is best illustrated if we look at maybe a weekly chart. And I'm not saying that you can't do anything with it, but we've topped out, we've pulled back on that weekly chart. I mean, it's not pretty, but we haven't really taken out the things on the weekly, right? I mean, I'm not sure I love this trend line or trust this trend line, but it's very choppy in my opinion. If I am doing anything within the sector, I'm going to basically be thinking about it as if I'm in that downward swing, I'm going to be looking for things breaking. If I'm in that upward swing, I'm, could theoretically be buying, stocks that, were held up all right. There's not many, but some of the real estate, some of the real estate stocks don't look too beat up here, but you're seeing turnover. Here's, AMT that's been very strong. Well, they haven't really done anything wrong right yet, right? And they may not. We're kind of seeing, a strong upward trend, that break to the upside, nice break, nice pullback, excited buyers. Now we're back here again, starting to see moving averages turn over, go a little sideways, haven't broke support, may not break support, right? Still have some, longer term averages, but you can kind of just see how that momentum is just gone. Whereas real estate for a while was showing a lot of strength. Most of them are pretty ugly. Simon Property. 2 weeks ago, I had it in my breakout watch list. Today, well, hey, I'll still call it a breakout when it breaks 192, but we got a ways to go before I have to make a call there. So many of these stocks are kind of mimicking it. And then you have some things like EQIX that have broken through a major long-term level of support. So that sector is showing, some indecisiveness, some bearishness for sure. And when you look at the individual chart, the ETF chart, I think, at least for me, that's a really tough read. Like I said yesterday, if you made me do anything, I'll continue to work, with the short-term trend, as a bear till we get down in here. But thankfully, I don't have to do anything with it. And I don't really intend to until some clearer signals develop. But it's moving. It's moving. And then lastly, over in communication services, again, another rough day for it. This one's interesting if and I know this is a relatively new, sector. And it's very weighted to the Facebook and both shares of classes of the Google shares. Google is the one I want to take a look at. They are working into that, and these are kind of the ones that are typically traded at that $1,000 mark. Again, that's been a major level. Obviously, that's a big round number, right? But that's been a pretty important level of support. Should be interesting to see, what happens if that breaks. I would call that a pretty clear sell signal if it breaks, but I wouldn't be surprised if it holds. At least it tries to, because forget about whatever you think about the round number. We've seen a lot of activity, resistance, breakout, support. So we've seen a ton of activity at this price point. Be really interested to see how it reacts. I would never dare buy in this market off of that price point, but if I were going to buy anything, it would be on a strong level of support like that. So that would be the type of thing, that type of support that I would be looking for as a prospective buyer out there. So again, much like yesterday, and maybe even arguably more so, it's completely ugly. We are, we're beaten up, and we're, extended to the downside, at least according to our eyeballs, right? That doesn't mean we can't and won't go down further, because we said this yesterday, could said the day before, but things are breaking support all across the board. There's not an ounce of faith in the market as of right now. And until something changes, I think the best approach is always what I always think it is. Go with the flow, right? And treat it accordingly. So while we've seen a lot of bearish sentiment, of course, in the equities market, we were able to push back through that 200, that previous resistance level here, whichever one or both you were looking at, over in gold today, and get a nice clean close. We did come off of those highs, but that's not necessarily a bad thing, and unless maybe you were sitting in it. And of course, we'd like to move it up as quickly as possible. Definitely, in my opinion, at least a bullish signal. signal, not really a lot of overhead until we get back into, that 1280 range, which will be a shorter term level of resistance, I think. But I do think that can be an area that we can kind of keep an eye on. But it's, again, much like we've been for a while. Anything, from a bullish point of view you're doing with gold, it really does make sense to me. I know we're all going to have our styles. I'm a wimp, you're aggressive, I'm doing covered calls, you're doing naked puts, somebody else is just buying the contracts. But really, as long as we continue to show these signs of strength within the chart, I have no problem with how anybody really is trading over in the gold market. Silver running right back up, knocking on that door as well. So we've not yet seen that break. We very well may not. Now we're going on over a week now of bumping our head into that resistance, right? We tried it a couple times last week. We tried it a couple times this week, and it's been the end of the road up until now. It should continue to cause us some problems. But again, if we're at resistance and think there's an opportunity for a potential breakout, we should probably plan accordingly, because it theoretically could happen as early as tomorrow, right? Being this close to it. I think, again, as I've said many times, I think above 15 is the signal for me. I think you could maybe argue a little bit lower, because that's kind of where the pure tops were through here. But really, not a lot has changed other than we're knocking on that door as a potential break. But again, if this is one of those things that 2 weeks from now, we're looking at it and it's down here, probably won't be terribly surprised, because that's what it's been doing, right? Again, never assume it's going to break resistance because you're watching for a breakout. Sometimes it's easy for us all to fall into that kind of a trap. Over in the natural gas market, another volatile day as we kind of went back and forth. We're building off of this little, now 4-day, or week-long floor. Worked its way fairly close to $4. Wasn't able to quite make it. Kind of got into some trouble on the intraday and kind of sold off, closing kind of in the middle of the range. Still pretty messy from a swing trader's perspective, in my opinion. At least, but it's starting to, again, if we can go sideways and get a little bit of clarity, maybe there will be something that develops here in the days to come. The only real, trade I can, see people, being in right now, if you will, from a swing point of view, is folks that are willing to, look at this as a test of the breakout point. I don't think that's very clear, but I could kind of see where they were coming from if that was the argument that you were making. I wouldn't feel comfortable being bearish. It might end up being a good call if I were bearish, but I would not be comfortable being bearish in this. Because again, it's kind of nasty. Look, when we kind of think about it, on a more week-to-week basis and look at this type of a time frame, of course it's pulling back after this big extended run. Right? It really hasn't done anything too terribly wrong, technically, at least in my opinion. It's just volatile. It continues to be volatile, and it really continues to be a tough area in my mind as a swing investment. I think right now this is a intraday trader's market, personally. And crude, very interesting day over in crude. Kind of bounced back a little bit yesterday, to nobody's surprise. It wasn't able to carry that momentum into a second day. But now we're starting to build that now 3-day intraday floor here, going to an hourly chart, over in this. So from a potential entry, maybe it's just on an intraday, maybe you're looking at it a little differently, but a break below 46, at least in my opinion, is going to be taking out this floor that's now 3 days developed. Looking at an hourly chart, we tested it on 3 separate occasions. So we kind of can see that traders are buying there, right? Whether or not you think that makes any sense, I don't think it makes any sense, but who cares what I think, right? They clearly are buying it around that 46 mark as it's building that little floor there. It'd be interesting to see how it behaves if that support level breaks. I suspect more selling will happen, and kind of as we kind of work our way down into those 42, 43, 44 range. I've heard all three numbers and kind of areas in between, and I really don't have too much of a problem with any of them. But at the same token, maybe we'll go back and forth, and that'd be cool too. Spend another week, let these falling averages work their way down and push us through that floor. That would be all right with me too. Really, from a resistance point of view, really, it's, in my opinion, still 50. So, it can rally again tomorrow, and I'm not going to be concerned or, anything like that, as long as we continue to hold below 50. Obviously, for anybody bearish in crude, we'd rather it didn't run and test 50, right? But from a technical point of view, that wouldn't be, bad, or unheard of or anything like that. So I think 50 and now 46 are kind of the areas that we can kind of look at on the chart with crude as we go into, I guess, our last trading day of the week here next week. So, I mean, it was kind of what we thought it was. I don't know about you guys, but from the folks I've talked to, other coaches, and some of you guys over at Tackle Trading, I mean, today kind of went kind of how we thought. We broke down, and then we broke more support, and more selling came in. Volatility is still there. Not a huge surprise. Continue to, I think the right way approach is to continue to say, hey, we're breaking support all over the place. You might be tempted to buy. Just ask yourself this: if you keep breaking support, it can't be a good buy yet, right? And that's why for me, one of my trading rules is it has to break resistance before I can buy. Now I'm not really thinking about buying right now, but time's going to pass. A week from now, 2 weeks from now, a month from now, I don't know when, but sooner or later, I'm going to see some buy signals that I do like. And for me, an easy rule to make sure I'm not catching falling knives, trying to pick the bottoms because I'm super awesome and cool, because we can all get that into our heads, is if it's not breaking resistance, it can't go up, so I can't buy, right? If it's not breaking support, it can't go down, so I can't sell. So when it is breaking support, well, hey, it's not breaking resistance, it is breaking support, the momentum is clearly established to that side. Let's make our lives easy, right? Interesting day, no doubt about it. Should be another fun one tomorrow. So with that, ladies and gentlemen, that'll do our market recap for today. But as always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the channel and hit that notification bell, and follow us over at Tackle Trading on Twitter as well to keep up with some of the things that we're running into during the market day. If you enjoy the market recap, it is always helpful and appreciated if you do give it a thumbs up, just to let us know that we are on the right track over here. Thank you so much for your time, guys. As always, it's great to see you. I hope you're doing well in the market and out of the market as we get very, very close to the holiday time of year, right? We're about done working. Well, maybe we're not. I don't know. But the world is about done working going into this weekend with at least a little bit of a break going into the Christmas holiday. So one more good day of work tomorrow, and then we'll kind of see how we're going to go from there, right? But as always, guys, thank you so much for your time. It's always great to see you. I will look forward to seeing you same time and channel here tomorrow. So with that said, get out of here. Happy trading, and I will see you all in the next one.